Right, now sorted, let's start. Okay, question 1. What is required here? Right, the required is calculate the, they are saying to us, calculate the VAT payable. Enough, let me attend to it. Fine. They are saying to us, calculate the VAT payable by or refundable to Glamour Ltd for the 2 months tax period ended 28 Feb 2022. Right, so we are required to calculate VAT payable or refundable for the tax period ended 29 Feb 2022. How do we calculate VAT payable or refundable? We need now to first calculate what? VAT output. We need to calculate what? VAT output. And calculate VAT input. Right. If our output is greater than input, we have VAT what? Payable. If VAT output is greater than input, then we have VAT what? Payable. Payable to SARS. But if it is the other way around, VAT output less than VAT input, we're going to have VAT refundable. Right. So I always say VAT output, it's a liability. We collect it on behalf of SARS. Then input is an asset which we claim from what? From SARS. Therefore, if the liability is greater than the asset, we have payable. We have a what? A payable. But if the asset is greater than the liability, we have a what? A refundable. That's what they want here. Right, round all the amounts to the nearest rand. Give reasons where the amounts are nil. The reasons where the amounts are nil can be zero rated or exempt. Are we together? Pay attention to this one. Pay attention to the reasons. The reasons why the amount can be nil is because of what? It being zero rated or it being being exempt. Right, you should not ignore that. You should not ignore the reason why the amount can be nil. It can be nil because of it being what? Zero rated or it being exempt. Right. My network is a bit unstable. All right, let's go through the transactions now. Right, they're saying Glamour Ltd rent out theme customs and evening wear. The company is a registered VAT vendor for VAT purposes and is registered on invoice basis. All right, let's take a pause here. They are saying the company is a registered VAT vendor. What does this mean, or what is the significance of them telling us that the company is a registered VAT vendor? Anyone to assist there? What is the significance of this statement? Right, it simply means that the company can claim input VAT or charge output VAT. Claim or charge. Claim input or charge VAT output. Remember, an entity which is not a registered VAT vendor cannot charge VAT output and can also not claim input what? VAT. Right. It is registered on invoice basis. What is the significance of them telling us that the entity is registered on invoice basis? What does this talk to? I remember I explained all these terms. Anyone to assist? What does this talk to? Remember, if you are given a question, you need to understand the question, everything in the question, so that you'll be able to answer it. Without understanding the terms used in the question, you struggle to answer the question. They are saying the entity is registered on invoice basis. What does this talk to? Right, talks to time of supply. Talks to what? Time of supply. Talks to time of supply. Or let me say we have invoice basis and what? We have invoice basis or what? An entity can register on invoice basis or what? Payment basis, good people. Payment what? Payment basis. So on invoice basis, time of supply is earlier of what? Is earlier of payment or invoice date. How to get it? Earlier of invoice date or payment date, whichever comes first. Then payment basis, time of supply, is when the payment is made or when the payment is received. Right, revisit that part where we covered this. Right, in case you get a question on invoice basis and payment basis, or you get a question requiring you to explain the meaning of invoice basis, payment basis. Right, symbol talks to time of what? Symbol talks to time of supply. Right, the following information relate to some of the transactions that occurred during the period January and February 2022. Right, if you go to the required, they said to us we should calculate VAT payable and VAT refundable for the 2 months tax period. That is, for the 2 months tax period ending 29 Feb 2020. So we are calculating for which month? For January and Feb, because 2 months ending 29 Feb is going to be January and what? And Feb. And here they say to us, the following transaction relates to some of the transactions that occurred during the period January and February 2020. All amounts include VAT where applicable, unless or otherwise stated. Right? All amounts include VAT. So in other words, all the amounts given are simple a what? A consideration. All the amounts given are what? A consideration. What did we say on consideration? We said consideration is an amount inclusive of VAT, and therefore we calculate VAT by saying 15 over 115. We calculate the VAT portion by saying 15, by saying consideration times 15 over 115. If they say to us the amounts exclude VAT, we are going to calculate our VAT portion as what? 15%. You say amount times what? 15%. Right, so these are the things which you should address reading your introduction here. Are we together? Each and every sentence given should mean something, or you should get its what? Its meaning. Right, now we go to transaction one. We go to what? Transaction one. They're saying to us during January 2020, some of the evening wear, a fax machine and the computer were stolen from the business during a burglary. In February 2020, an insurance company paid an amount of 128,000 to the company as a partial compensation for the evening wear. A fax machine to the value of 6,000 was also replaced by the insurance company. The total insurance premium paid for all the company's assets for the period January and Feb 2022 is 1,100. Since the above insurance claim took a long time to be finalized, Mr. Leti decided to sell his personal computer to the company on 29 Feb 2020 for the use in the business. The selling price was 8,000. The market value as of 28 Feb 2020. Mr. Leti originally purchased the computer for 10,500. He used the computer 80% for business purposes as from 25 Feb 2020. The company also purchased an antique mirror for business use from Mr. L's mother for 5,000. Right, you are given too much information in this transaction, but what we want is to calculate VAT payable or what? Or refundable. What we want from this transaction is simple VAT payable or refundable. So then how do we go about it? First, you have to identify items or transactions that give that result to VAT output. VAT output. First, you want VAT what? Output from that transaction. There's too much information. Notice some people, they say output VAT or VAT output is one and the same thing. So don't get confused there. Sometimes I'll say VAT output or output VAT. The terms are used interchangeably. The terms are used what? Interchangeably. Right. Let me attend to the knock. Right, let's go back to that information and now try to identify items that will give rise to VAT output first. Then after that, we go to items that will give rise to VAT input, or that will trigger VAT input. Right, let me first delete. Right, they are saying during January 2020, Faith is a banner. Right. They are saying to us during January 2020, some of the evening wear, a fax machine, and a computer were stolen from the business during a burglary. What happened? We lost our assets and our stock. Remember, we are in a business of selling customs. They said what? Customs and evening wear. So we lost our trading stock and we also lost our assets. Evening wear, it's our trading stock. Fax machines an asset. Computer is an asset. In February 2020, an insurance company paid amount of 128 to the company as a partial compensation for the evening wear. Right, so we received 128,000 from the insurance company as a compensation for our stock stolen. As a compensation for our trading stock, what? Stolen. So what do we do with this 120,000, 128,000? Is it a supply? Are we going to calculate VAT output on it or VAT input? Anyone? What are we going to do with this 128?
We're going to calculate output VAT.
We are going to calculate output VAT on it. Why are we calculating VAT output? Right, now today I'm going to teach you how to use your textbook. Right, make sure that you have silk there. Remember, I'm covering all the gaps. Right, make sure that we have that textbook called silk. I did share it in the group, in all the groups there. We have the textbook. Right, first let's address the what? Let's address this paragraph which talks to us charging output VAT. When do we charge output VAT? Right, let's go to those slides which we're using in our previous classes. All right, I want you to note something so that even in the event you decide to further your studies, you won't have a problem. No? All right, output VAT. When do we charge output VAT or when do we levy output VAT? Right. Right, according to this slide, which is the same information which is in your textbook there, they are saying output VAT is levied on the supply of goods or services in the Republic of South Africa by a vendor in the course of the furtherance of an enterprise. Right, let's take a pause here. We are receiving an insurance payout from the insurance company. Is that a supply of goods or service by a registered vendor in the course of a furtherance of an enterprise? Anyone? Is that a supply of goods or service? Did we deliver any goods or services to a client? Right, that's the first test which we need to use. Did we deliver any goods or services to the client? You said we should charge VAT output, but the question is, did we deliver any goods or services to the client for us to charge VAT output?
No.
Right, so on what basis now are we charging VAT output? On what basis are we levying VAT output?
Or on the insurance, because there is a payout for the things that were lost.
Because there's a payout for the things which were lost, right? You are 100% that we need to charge VAT output, but the reason now which you are giving is not according to section 7.1a. Is not according to section 7.1a. Remember, with the VAT, we use what is called the VAT Act. So the VAT Act section 7.1a is saying output tax is levied on the supply of goods or services in South Africa by a registered vendor in the course of furtherance of an enterprise, or goods imported into South Africa, or the supply of imported services. All right, the insurance payout does not fall under this. Are we together then? The insurance payout does not fall under this. So where does it fall? Insurance payout is called a deemed supply, good people. An insurance payout is called a what? A deemed supply. So therefore, calculating VAT output on a deemed supply, we have now to move to another section. Are we together? Which is not section 7.1a, which is now section 8 of the what? Of the VAT Act. Right. Let's all go to our textbook there, Silk. Go to Silk and look for deemed supply. All right. Let me scroll on it here on my laptop. I'll tell you the page now. I'll tell you the page. Right, Silk page. Right, let's go to Silk page. Page 1096. Right, let me reshare it again on the group so that everyone will be. Right, let me reshare that textbook so that everyone will be in touch. We are concluding, so therefore you need to know all the exceptions, and again you know all the however. It is correct that we need to charge VAT output, but on what basis are we charging are we leveling our output VAT? It is because it's a deemed supply. That's the reason which you need to give and get a mark for that. That book of mine. Right, so I shared the textbook again. Right, if you go to page 1096 there, the subject is saying deemed supply. The dating is saying deemed what? Supply. So on deemed supply, they are starting with ceasing to be a vendor, which is we don't want this one for now. And then indemnity payment. Right, page 1098. That's where you find indemnity payment. Indemnity payment. Can I share it here? Let me see. So in here, but it's you need to check my space. Are you there? Those who have managed to open the textbook, their textbooks. Do you see it there in your textbooks, good people, paragraph 31.12.2? Good people, are you still there? Say something, Peter. People are quiet.
Yes.
Unfortunately, I'm failing to share it. It's the. All right? Are you there? On that page, 198. All right. Are people tired? All right. All right, let me try to reach the page. All right, basic pressure room, adjustments. What is it that I want? Rate of supplies, output, deemed to supply, indemnity payment. Want this one? Take me there. 98. All right, I want us to address this one once and forever, so that you enjoy in the exam, in the event is being tested. Right, there it is. Right, we have a deemed supply, which is what indemnity payment. That is the payment from the insurance company. Right, this one. Right now, how do we go about it? They are saying to us it's a deemed supply. So on supply, we have now to calculate what our VAT output. How do we calculate VAT output on this one? It is always 15 over 115. Right. In the event you are required to calculate VAT output on indemnity payment, which is the insurance payment, you calculate your VAT in the following manner. Whether they have said to you the amounts are exclusive of VAT, you use 15 over 115. You don't say times 15%. If the amount from the insurance company is a consideration, it is inclusive of VAT. That's the first rule which you need to know about this deemed supply. It's not a normal supply according to the section 7.1 what definition. It is a deemed supply, meaning it's a special supply where we calculate VAT output at what 15 over 115. Why? Because what we receive from the insurance company is inclusive of what? Of VAT. Right, then again, remember I said to you, when it comes to VAT output, we do not apportion it. When it comes to VAT output, we do not apportion it, but there's an exception now. VAT output, which is on indemnity payment and fringe benefit, we apportion it. How do we apportion it? We apportion it to the extent of what? To the extent of taxable supplies. If you go to your textbook, you'll find the formula, this one, value of supply. What is the value of supply of indemnity payment? They say the value of supply is equals to A times B times C, where A is your tax fraction. Your tax fraction will always be 15 over 115. Then B, the consideration, which is the amount which you are going to receive from the insurance company. In our question, there is 128. Then it times the extent, all right, times C, which is the percentage for which the loss was incurred by the vendor in the course of making taxable supply. So in the event that we are making taxable supplies and exempt supplies, we're going to say times the percentage of making what? Taxable supplies. If the percentage of making taxable supplies was 80%, we're going to say times what? 80%. Are we together? Right. Then time of supply is when the payment is received from the insurance company. Is when the payment is received from the insurance company. So what is going to happen is we are going to notice that in some solutions, you will have the indemnity payment being apportioned. Why is it being apportioned? It is apportioned to the extent of making what? Taxable supplies. In our example, in our question here, the entity is making 100% taxable supplies. So therefore, we are not going to apportion our indemnity what? We are not going to apportion our indemnity payment. So we'll calculate output VAT on the total amount, right? How much did you receive? One can come here and write indemnity payment, indemnity. My pen is not writing properly. Payment, or one write insurance receipt. The terms are still the same. Are we together? The terms are still the what? The terms are the same. How much did you receive? We received 128,000. 128,000 times 15 over 115. 115, which will give us how much? Kindly calculate for me. A 128,000 times 15 over 115.
16,695.65.
16,695.
0.65. 65.
Or 65. So it's going to be 6. Right. Indemnity payment. That's the story on indemnity payment. It is not a supply, but it's a deemed supply. Right. Given a discussion question, you cannot leave out the term deemed supply. Are we together? Given a discussion question, you have to tell us that insurance payout is a deemed supply, and we calculate it to the extent of what? Of making taxable supplies. Please refer to the textbook, that part, read through that part and understand indemnity payment. Right, continue. Right, they said a fax machine to the value of 6,000 was also replaced by the insurance company. What do we do with this one? What do we do with this one? A fax machine with 6,000 was replaced by the insurance company. What do we do with it? Are we going to calculate the VAT output on it or not? Fax machine replaced. fax machine replaced.
No.
Right, the reason?
There's no VAT on replacement of an asset.
There is no VAT on replacement of asset. Thank you so much. If the payout is in cash, you calculate VAT output, unless if it is the payout for long-term insurance or a disability. But if the payout is a replacement, or if a payout is a replacement of an asset, then there is no VAT. Reason, remember they say give a reason. You can say replacement of asset or not cash. Replacement. Remember they said give a reason for zero amount. Amount here is zero. What is the reason? It's a replacement of an asset or is not payment in cash. Are we together? So now, what is the story on insurance? First, we have to check out whether the payment is in cash or it's a replacement of an asset. If it is a replacement of an asset, then we do not have VAT. But if the payment is in cash, now you have to check whether it's for disability, it's for long-term, what? Not long-term, life insurance or life assurance. If yes, no VAT. Disability, life assurance, no VAT. But now, if the payment is for not those two things, then we calculate our VAT what? Output. Right. Refer to that paragraph on SIP talking to indemnity payment. You get all these. Right. Let's continue. Now, we continue with the story. The total insurance premium for all the company assets for the period January and February 2022 is 1,100. The total insurance premium paid, we made a payment. Are we together? We made a what? A payment to the insurance company. So a payment will now trigger what is called the VAT input. So there's a possibility of us having a what? An input. Let's keep a line here in case there's another one which will result to VAT output. Remember, the transaction is a what? A combined. Right, insurance premium. Insurance, a premium. Right, are we going to claim input VAT or not on insurance premium? Are we going to claim input VAT on insurance premium or not?
We're claiming input.
Right, the reason being what? What is the reason of claiming input VAT on that transaction?
Someone must assist.
Remember, the VAT questions will come as calculations, journals, or discussion. Right, they will tell you that an entity made a payment of 5,000 relating to insurance premium. Discuss VAT implications. Yes, you are right by saying input VAT will be claimed, but that cannot give you 5 marks. All right, if you go to paragraph 17, is the one talking to input VAT. They're saying input VAT can be claimed by a VAT vendor where VAT have been charged in respect of taxable supplies of goods and services or importation of goods to the extent of taxable supplies. Vendor who purchase goods to be used in making of taxable supplies can claim input VAT. No input VAT can be claimed unless there's a valid tax invoice. Right, so now let's try to fit that transaction here. Right, it can be, they're saying VAT input can be claimed by VAT vendor. Right, first point is that entity of ours is a VAT vendor, where they told us that is a registered what? VAT vendor. So the transaction was made by what? Registered VAT vendor in respect of making taxable supplies, right? Remember, the insurance is towards what? We are insuring our stock and our assets. So it was charged in respect of what? Taxable supply of goods and services. So the first point there is check whether the person wanting to claim VAT input is a registered VAT vendor. If yes, give it a tick. Is the expense towards making taxable supplies? Yes, we are insuring our business. From that business, we are making what? Taxable supplies. Right, that's the discussion part of it. Then again, they are saying to us, you only claim provided there is a valid tax what? Tax invoice. Are we together? You only claim provided there is a what? Valid tax invoice. Right. Our question is given on the assumption that there is a valid tax what? Invoice. But if it was a discussion question, they were going to clarify whether there is a valid tax invoice or not. Where there is no valid tax invoice, you cannot claim input VAT. Why? Because one of the requirements is not what? One of the requirements is not met. So in our case, we are going to claim input VAT. Why? Because we're dealing with a registered VAT vendor, and our registered VAT vendor is making what? Taxable supplies. Because how much? 11,000, 1,100? 1,100. So we're going to say 1,100 times 15 over 115. Why 15 over 115? Because they say to us, all the amounts include what? VAT. All the amounts include VAT. How much are you getting, good people?
143.
143. 100 and what? 43. Right, then we continue with our story. Since the above insurance claim took long to be finalized, Mrs. Letani decided to sell his personal computer to the company on 25 Feb 2020 for use in the business. What happened here? We bought, remember we're doing this from the side of the business. We're not concerned about Mr. Letania. Who is she here? Who is he? Is Mr. Letania decided to, did they tell us who this person is? All right, they're saying Jen Letania is one of the company's shareholders and the director. All right, she is the kind of an owner of the business because shareholders are the owners of the business. And at the same time, he is the director of the business. Are we together? So what happened? He sold one of his computers. So we bought an asset from a non-vendor. An individual is a non-vendor. This individual, let me just say, this individual is a non-vendor. So we bought an asset from a non-vendor. Are we together? So therefore, we are going to claim a notional input. This asset is a second-hand good. Why are we saying it's a second-hand good? They said to us, since the above insurance claim took long to be finalized, Mr. Letania decided to sell his personal computer to the company on 25 Feb 2020. So we purchased a second-hand good from a non-vendor. We claim what is called the notional input VAT. How do we claim our notional input VAT? We claim it on the lower of market value and what? And cost. Notional input VAT is on second-hand goods. It is claimed on the lower of cost and market value. All right, let's continue with the story. The selling price was 8,000. The selling price was how much? 8,000. The market value is at 28 Feb 2025. That is the date in which the asset was what? Was sold. He used the computer, Mr. L originally purchased the computer for 10,500. He used the computer 80% for business purposes as from 25 Feb 2020. He used the computer for 80% for business purposes as a 28 Feb 2020. The company also purchased, right, this one is now another transaction. Right, so on computer, we are going to claim notional input. Computer, we claim notional. We need to show the examiner that you know what you are doing. Notional input. Notional input. How do we calculate our notional input? We calculate it on the lower of cost and the market value. We are told that the market value, the selling price was 8,000, which is the market value. And the cost of this asset was how much? 10,500. So the lower of the two is 8,000. 8,000. And again, on notional input, when it comes to notional input, whether they say to you, the amounts are inclusive or exclusive of VAT, you always use 15 over 115. 115. Right. The computer is used 80% for business purposes. Then the other 20% is for non-business purposes. Right. Notional input, we apportion it. We apportion it to the extent of making taxable supplies. The extent of making taxable supplies here is for business use. So we'll say times 80%. The extent of making taxable supplies, which is how much? 80%. All right, give me the answer there. The extent of making taxable supplies is 80%. Why? It is used 80% for business purposes, 20% for private purposes. We cannot claim input VAT on the 20%, which is not for the business. We'll be robbing SARS. Right, how much are you getting here, good people? $8,000 times 15 over 115 times 80%. Are we still together or I'm left alone now?
The corner. I'm getting 834.
How much are you getting? 8,000 times 15 over 115? 834. I will check your answers, people. You are the ones doing calculations. 834. Right. Let's continue. They say it here. The company also purchased an antique mirror from business use from Letania Mother, 5,000. Right. We also purchased this mirror. It's also a second-hand good. We claim notional input. Mirror. Notional input. Notional input. Why is my pen not writing properly today? Right, what are they saying? They say to us, we paid how much? From Letania's mother, 5,000, right? We're not given the market value, so therefore we're going to use the cost here. We're going to use how much? 5,000. This one, we're not going to apportion it because they said it's for business use. So it's used 100% for what? Business use. We'll say 5,000 times the 15 over 115. 5,000 times 15 over 115. This will give us how much?
652.
652. Right, that's all. That was the last one. So now what you do, you add your top part and your bottom part, right? How much do we have here? We have 16, 696. Then here, how much do we have? 143 plus 834 plus 652.
18,039. No.
18.
Sorry.
You only add from 143, 834, and 652.
It's 1,629.
1,609. Right,
Yes.
so our output is greater than input. we have VAT payable. VAT payable of how much? You say your output minus input, 16,696 minus 1629. Can I change the platform which I'm using for? Can I change my writing platform, put people? I don't know whether it's my pen or is this. Import new document. All right, let me use this one and see whether my pen will still misbehave. All right. That's right, nice. Okay, so on that one, how much did you get as your VAT payable there? Your output minus input, you get your VAT what? Payable of how much? Right, you calculate the amount, no problem. Any questions on one of these entries or any question on any of these entries, good people? Right, so what you got from this question is you have indemnity payment. Refer to the relevant section in your textbook. Go read on on what indemnity payment. Then again, we have notional input VAT. Where we get notional input VAT, we get it when we purchase a second-hand good from a non-vendor. Altogether. For now, let's say we have notional input VAT on purchase of second-hand goods from non-vendor. If the computer was purchased from another vendor, we're not going to talk of notional input. We only talk of it when the purchase is from a what? Non-vendor. Is it clear? All right, let's go to the second one. Let's look at the second transaction. Let's look at the second transaction 2. All right, we have transaction 2. What is happening in transaction 2? Let's read the story and understand what's happening and see whether we are again in a position of answering it. Now I'm going to close it because we've discussed the basics. I'm going to close on this one. Right, they are saying on 1 January 2020, Glama purchased the second-hand delivery vehicle from a non-vendor for 170. Right, note, we have notional input. Notional what? Input here. We purchased the second-hand delivery vehicle. This truck was granted to the supervisor for use as company car. Glama Ltd bears the full cost of fuel, maintenance for this vehicle. Right. What is it? They purchased the second-hand car and they gave it to who? To the director, to the supervisor. We have a fringe benefit. A fringe benefit is also a deemed supply. Fringe what? Benefit is also a deemed what? Supply. We are going to have VAT output on what? On this fringe benefit, which is called use of company car. Right, we did address this one. Right, let's continue. During the January 2020, the fuel for this truck was 2,500. There is a possible input VAT at how much? It's 0. Why? Fuel is a 0 rated what? Supply. The truck was stolen on 31 January 2020. An indemnity award of 150 was received from the insurance company on 12 Feb 2020. Again, we have output VAT. To replace the stolen truck, Glama purchased a new double cab bakkie from a vendor on 14 Feb for 220. Right, let's take a pause on this one. To replace the stolen truck, Glama purchased a new double cab from a vendor. Right, they replaced a delivery vehicle with a double cab. A double cab is a motor car as defined. A double cab is a motor car as defined. So therefore, input VAT is denied on the purchase of a double cab. If they purchased a single cab, we were going to claim input VAT. Why? Because a single cab is not a motor car as defined. On a motor car, VAT input is denied. Why? Because it is treated as a luxury vehicle. Right, we have all the basics. Now we can answer our question. Right, we start with VAT output. VAT or VAT output. Right, what do we have there? There's a fringe benefit. There's a fringe benefit. There is insurance payout, indemnity payment, payment. What else? Items that give rise to VAT output. Right, we identified a car given to. Right, there are only two. Right, now let's start with the car given to a director. What do we call this? It's a fringe benefit, so it's a deemed supply. We are going to claim input VAT. At how much? Right, at how much do we calculate our VAT output? Or what is the value of our fringe benefit? Right, this one is pretty tricky and it carries a lot of marks, people. This one is pretty tricky and it carries a lot of what? Of marks. Right, the first thing which you need to do is to calculate the determined value. You calculate what is called determined value. Right, what is determined value, good people? Determined value is simple. The purchase price excluding VAT. This vehicle was purchased for how much? The vehicle which was given to the director, it was purchased for 170. So determined vehicle value is going to be 170 times 100 over 115. Right, that's the first step. You need to calculate your determined value. After calculating your determined vehicle, you have to check whether it's a motor car or not a motor car. This is a delivery vehicle. A delivery vehicle is not a motor car. So therefore, if it is not a motor car, you say your determined vehicle times 0.6%. But if it is a motor car, you say it's times 0.3%. In our case, it's not a motor car. So therefore, we are going to say times 0.6%. Note that is 0.6 what? A percent. Then after that, you have to check whether the employee paid any maintenance fee, or you have to check whether the maintenance fee is paid by the employee. If the maintenance is paid by the employee, you say minus 85 Rand. In our case, they told us that the maintenance fee is paid by who? By the company. They said to us, Glamour Ltd bears the full cost of fuel and maintenance. So we are not going to deduct 85. All right. You only deduct 85 provided the maintenance cost is paid by the employee. In this case, the maintenance cost is not paid by the employee. Right. Then after that, you have your value of fringe benefit. So by saying 170,000 times 100 over 115 times 60, 0.6%, you get your value of fringe benefit. We call this cash equivalent. We're still going to do fringe benefits, those who are doing TAX3701 at a later stage when we are looking at taxation of individuals. So this will give you your value of what? Fringe benefit. Then after that, now the tax portion is going to be times 15 over 115. Then it times the month in which the taxpayer used the vehicle during the tax period. So now we have to check when this vehicle was given to the taxpayer. Remember, our tax period is January and Feb. When was the vehicle given to the employee, not taxpayer per se, to the employee? On 1 January 2020, Glamour purchased a second-hand delivery vehicle from a non-vendor for 170. The truck was granted to the supervisor for use as company car. When was it granted to? Glamour bears the full cost and maintenance cost for this vehicle. During January, the fuel for this truck was 2,500. The truck was stolen on 31 January 2020. Oh, okay. So the truck was purchased on 1 January and stolen on 31 January. So the supervisor only used the vehicle for 1 month. So the fringe benefit which was received was only received for a period of how many? 1 month. So we need to calculate tax for a period of what? 1 month, not for 2 months. Why? Because we lost the vehicle on 31 January and we replaced it on 14 Feb. So the supervisor only used the vehicle for a period of what? For 1 month. You check the last statement, they're saying the supervisor was not allowed to use this vehicle as company car. That is the new vehicle which was purchased as a replacement. So therefore, the value of our fringe benefit or the VAT on our fringe benefit is going to be 170,000 times 100 over 115. This first part, we are calculating the determined value. Then after that, you say times, check whether it's a motor car is defined or not a motor car. In our case, it's not a motor car. So we multiply it by 0.6%. Then it times, or before you say times 15 over 115, you have to check whether the employee paid for maintenance cost or the employee is responsible for the payment of maintenance cost. If the employee is responsible for maintenance cost, you minus 85 rand. In our case, it is the employer which is responsible for maintenance cost. So we're not going to minus what? 85 rand. That's a standard amount, 85 rand. So in our case, no minus 85, you say times 15 over 115. Then it times the month in which the employee used the vehicle. In our case, is 1. Please, let's all do this calculation. Let's all punch this calculation on our calculators. I know you are going to get different answers, and I'll correct you where you went wrong. All right, let's all punch this calculation in our calculators and get the amount. Are you winning there?
We're still calculating.
All right, no, I'll give you time because I know the importance of it.
I'm done.
You are done. How much are you getting?
I'm getting 115.69.
115.69, that's 116, eh?
Yes.
All right, we have 116. 116. Others, how much are you getting? Oh, what's happening with my pen? 116. All right, let's wait for others.
I'm also getting 115.69.
We're all getting 115.
Yes,
It's my first time It's my first time having students getting the same answer. Oh, you tried it before class, ne? I remember I shared these questions last week.
No, we haven't tried.
It's my first. You know the challenge is on
But
this
sir,
one.
you gave us calculation in front of us. It's just punching our calculators.
What I know is on 0.6% there. Others just use 0.6. You need to say 0.6% or you say 0.6 divided by 100. It's impossible that you all got this. You practice it before class.
But
That's why
sir, you need
I
to
know.
trust us. Say you even wrote a percent then next to 0.6.
All right, I trust you. Although I've been doing this for ages and I know how students struggle. All right, it's fine. Please, this one is one of the most important concepts. Whether you like it or not, is going to be tested in form of calculation or in form of discussion. Refer to a silk page. Silk page 1104. If you don't have it for now, just write it down. The steps are given there. And make sure that you are comfortable with it. 4 to 5 marks there on this one. All right, write it down. Silk page 1104. Okay, sorted. Now we have indemnity payment. What happened with the indemnity payment? We received a payment of how much? This truck was stolen. This truck was stolen on 21 January. An indemnity award of 150 was received from the insurers on 12 February 2020. So we received 150 from the insurance company. We are going to say 150 times 15 over 115. How much is it, good people? $150 times 15 over 115.
19.57.
19 point?
57.
57. Like this.
Yeah.
All right, so our total is going to be 116 plus 1957.
Sorry, I'm getting a different answer.
You are getting how much?
No, I'm incorrect.
It's 19.
I'm relying on you people on calculations. How much?
It's 19,565.
19,565.
Yes.
How many are getting this amount?
I'm also getting the same.
Right, so let's add the total 16,116 plus 1956.
It's 19,681.
681. Right, now we go to input VAT. Input what? VAT. Right, input VAT, what did we purchase? What did we pay there? They say to us, let me wrap so that I won't miss it. Right, we purchased a delivery vehicle, a second-hand delivery vehicle. So we're going to say a purchase of delivery vehicle. Right, you are going to write notional input because it's a second-hand, ne? Notional what? Wait a minute, did you buy it from a non-vendor? That's another thing which you need to check. Right, a second-hand delivery vehicle from a non-vendor. So it's a notional input, ne?
Yes.
Notional input. How much? 170,000. times 15 over 115. How much is it? $170 times 15 over 115. Everyone should do the calculation so that you get comfortable with these things. Eh?
$22,174.
22,000.
22,174.
174. Right, that's what we are all getting. Eh?
Yes.
Right, then we move on to the next one. What else did you pay or purchase there? There was a few. During 2022, the fuel cost for the truck, 2,500. Fuel cost, we're going to say fuel as zero rated. Zero, fuel is zero rated, there is a zero rated supply, so it's nil, dash or zero there. You get a mark for that. Then what else? We bought a double cab to replace the salt cab, né? The salt delivery vehicle. Right, you come here and write double cab, double what?
Cab.
Inputs denied. Motor car. Yeah, input denied, motor car. Or motor car input denied. Input denied, motor car is defined. Motor car is defined. Dash. Right, let me see on SIP where you get this information. I remember I did explain it last week. Even that recording is there. But I want you to be safe. Go check it on your own so that you won't struggle in the exam and the heavy headache. All right, let's see on SIC the page which you should refer to on the motor car. You should be comfortable with these terms and be able to explain them to the next person. If you find yourself being able to explain it to the next person, then you are good to pass. Ne? You are good to pass. So the best thing to do is after class, visit your silk there and try to motor car. Where is that one? It's on input VAT. Right, the class is going to be low. It's going to be long. It's not going to be 1 hour 30 minutes. All right, so input denied. All right, see. On silk, right? Go to page 11, 1122. Just write it down. Page 1122. That's where you are going to find motor car. They'll give you a definition of a motor car. The examples of a motor car are given. Examples of not a motor car are given on page on that particular page. 1122. Silk. Right. What else do we have? What else was given? Or what else is given here? Let's see. To replace the stolen vehicle, the new part, right? That's all. Right. So let's add to the input. So our input is going to be 22,174. Right. What are we having here? Output is less than input. Our liability is less than our asset. Remember, I said to you, input is an asset, then output is a liability. So therefore, we're going to have VAT refundable. VAT what? Refundable.
Refundable.
Yes. You are going to say input 1968 minus 22,174. You get a negative answer, it's fine. So that's what they wanted. Right, move on to the next transaction. Let's move on to the next transaction. Transaction 3. They are saying to us, Glamour acquired a portable sound system on 30 April 2019 from a vendor for 4,500 to create a pleasant atmosphere for the clients while shopping, not regarded as entertainment. Right, see how clever they are. They are saying it's not regarded as entertainment. The sound system is to keep the clients entertained during their shopping. One was going to say it's entertainment. Then on entertainment, we know the VAT input is what? Is denied. In this case, they said to us, no, it's not entertainment. So therefore, we're going to claim input VAT on it. Right. Let's continue. This sound system was used 70% for business purposes, and the correct amount of input claimed, and the correct amount of input was claimed at the date of purchase. Right, so now they are saying it's used 70% for business purposes, and the 30% is for non-business purposes. Input VAT, which was claimed to people, is how much? Is 4,500 times 15 over 115, then it times 70%. Input VAT, we claim it to the extent of making taxable supplies. So the business here is making 70% taxable supply, or they are saying the asset was used 70% for business purposes. The private use, no input VAT on it. Right, let's pause there. So there's no need for us to calculate it because they are saying it was correctly calculated. No need for us to what? To calculate it. Mr. L decided on 10 January that he would take the sound system to his home permanently to be used wholly for private purposes. The market value of the sound system on January 2020 was 5,000. On 15 January, Glamour Ltd acquired a new sound system, which is used 100% for business purposes. Right, on the new sound system, no problem. We're going to claim input VAT at how much? At 15% over 115. No apportionment, is used wholly for business purposes. Right, now the challenge is on the old system. What happened here? The director of the company took the company asset, which was used for business purposes, and used it for what? Private purposes. Right. On the date they purchased this asset, which is on when? 30 April 2019, SARS allowed the company to claim input VAT of how much? Of 4,500 times 15, sorry, 4,500 times 15 over 115 times the how much? Business use 70%. Give me the amount here.
410.
400 and what?
And 10. 410.
400 and what? 10. Right. The reason why SARS allowed us to claim input VAT, it is because the asset was used for business purposes. Right, now we have taken the asset for private use. SARS is going to say, now I want my input VAT back. Are we together? We will now need to pay this input which was allowed as a deduction. It was given as a deduction because the asset is used for what? Business use. Are we together? So SARS want its input VAT back, but this input VAT, we are not going to calculate it on the purchase price. We are going to say market value, right, times 15 over 115. The asset was moved from 70% business purpose to 0% business purpose. It was used 70% for business purposes and to 0% what? Business purposes. Why 0% business purposes? It is because it's now used for private purposes. We no longer have any business use. So therefore, they say if there's change in use, you check whether the asset moved from 0%, from 100% business purposes to 0% non-business purposes. If that's the case, you are going to calculate output VAT on the market value. All right, let me go back to that slide. I think I did explain it last week, if I'm not mistaken. I was using a slide, this one. All right. This is another concept which you need to know, but they don't usually test us on this one. It's more of a CTA stuff. It's rare, but they do sometimes. Let's just address it at once so that you won't have any challenges in the event that is given. Right. This talks to change in use, change in taxable use. Right. They are saying change in taxable use. 100% or a percentage taxable supply to 0% taxable supplies. We moved from 70% taxable supplies there to 0% taxable supplies. So what does the Act say? They say we have to calculate output VAT on open market value as follows. Open market value times 15 over 115. That's why they were supposed to take the market value of the asset on the date of change in use and multiply it by what? 15 over 115. Right, 100% taxable supplies to lower percent taxable supplies. Let's say the entity was making a 70% taxable supplies and it moved to 30% taxable supplies. What do we do then? We don't use the market value when calculating our VAT output. We use the lower of cost or market value times the percentage change. The percentage change here is 70 to 30 is how many? 40, né? So we say 40%, we'll say lower of cost or market value times 15% over 115 times 40%. That is, if you are moving from a higher percentage to a lower percentage, right? Moving from 0% taxable supplies to 100% taxable supplies, we'll calculate now VAT on the lower of cost or market value. Then in times 15 over 115 times taxable supplies, right? It's rare for them to examine us on this one. Let's just pay attention to the first one. I don't think they will take us to these other options because they are a bit challenging. Right, so, but our question is, we are moving from 70% taxable supplies to lower percent, to a lower percentage. We're moving from 70% to a lower percentage. Where is my writing paper there? What happened to it? I can't see it. Did I delete it by mistake? I just hit done. Okay. What happened? Or is this one? All right, fine. So we moved from 70% to 0% taxable supplies. So therefore, we'll calculate output VAT on what? On the market value of our asset. So the market value of our asset is given there. So what do we do? What's the term which we use, by the way? Private use. Right, we're going to say output VAT. Change in use. Let's just use change in use or private use. Change in use. Change in use. The market value of the asset, it's how much? The market value of the asset, this is the cost, we don't want it. The market value is 5,000. So we're going to say 5,000 times 5,000 times 15 over 115, giving us how much? Calculate.
652.
652. Right, this principle I know is a bit challenging. I understand. If you are lost, it's okay. But revisit it again. Go to Silk and try to digest it. Right, we move on. What else happened here? It's a long story. The track was granted, no? All right, Mr. will take the system use for private use, the market value of the system. Right, they also purchased a new one. Huh? They also purchased a new system. On the purchase of new system, good people, we are going to watch. On the purchase of the new system, we are going to claim our input VAT on the purchase price because it's not a second hand and is again is used fully for business purposes. So we just come and say new system, input VAT, new system, 6,000 times 15 over 115. How much is it? $6,000 times 15 over 115.
$782 and 83.
783. 783. Right. Going back to that one which we sold. Going back to that one which was right. Good people, my network misbehaved a bit there. Can you hear me?
Yes.
Right. I was now on the old system given to the director. What happened with the old system, when we purchased it, we were allowed to claim input VAT on only 70% of it. 4,000 what? 500 times 15 over 115, then times 70. Right. Then now, this asset is good as it has been what? Sold. SARS charged as VAT output on what? On the market value of 5,000. So therefore, they will now allow us to claim input VAT, which they denied us. They denied input VAT of how much? Of 4,500 times 15 over 115 times 30%. They will now allow us to what? To claim it. Why? Because the asset has now been disposed. And on disposal, we paid VAT on the what? On the market price. So we claim input VAT on change in use. You come here again, you say change in use. You take the original cost price times 15 over 115 times 30%, which is the portion you were denied input VAT. 4,500 times 15% times 15 over 115 times 100% times 30%. We call it change in use. How much are you getting?
176.
176. 176. Right. This is the input you were denied on the purchase of the old sound system. Now we have sold it. So SARS will allow you to claim that input which you were denied. Why? Because they also charge you output on the what? On the market price of the asset. We call it change in use. So the total here is 652. The total here is 783 plus 176. How much is it? 783 plus 176. That's 9, 15.
959.
Right. Okay, output is less than input. So we VAT what? Refundable. VAT refundable of how much? 652 minus 959. 959. Giving us how much?
307.
307 negative. Right, this one was a bit difficult because there was change in use, or there's change in use. Please refer to Silk page change in use. Let's see where we can find change in use. But don't pay too much attention to it. Just know it. Just know the surface, né? Because there are a lot of things explained there in Silk. Or when there's change in use, always refer to this part, né? All right, let's do the last one. Please, let's only take 30 minutes on this one. Our class is supposed to end at 2, supposed to end now, but now because of we are concluding right, question 2. Let's do question 2. I think question 2 is the one where we need to apply apportioning etc. I'll delete this one, by the way. Right, so on this one, let's take only 30 minutes, né? All right, what is required on question 1.2? Let's go to the required first. What have I done? It's continuing up to this other level. All right, so I need to do it this way. Move to trash. Move to trash. Right. Okay, it's now complete. No. This should be deleted again. And move to trash. All right, we have this one. This one is a good question, quite comprehensive. And there is an issue of apportioning your VAT input. It's a good question. Right, let's go to the required first. They are saying to us, calculate VAT payable or refundable to main rent for the 2 months tax period ended 31 January, meaning we're taking which months into account? December and January. You must provide the reasons for amounts that are new that is the zero rated supplies and exempt supplies. Ne? All right. How do we structure the solution? All right, by looking at the question, you see that you are given your income and you are given your expenditures. So we all know that where we have income, we have VAT output. So you structure your answer in this way, like you are doing the statement of profit and loss, VAT what? Output, or output VAT. Right. Here we're going to include all our incomes plus fringe benefit plus deemed supply. All right, let me just say we're going to include our supplies, that is normal supplies, and our deemed supplies. The mistake which students do when it comes to a question structured like this is look at your income. You are only given commercial rentals, residential rentals, interest levied on overdue account, insurance. The fringe benefits are not given here. You have to hunt for fringe benefits. Before you jump to expenditure, you go to additional note and look for fringe benefits. Fringe benefits are not given here. So if you only deal with commercial, residential, interest, insurance, you lose marks. Are we together? You lose what? You lose marks. Right, let's read the question. Main rent Ltd earns its income from both commercial rentals, office blocks, factory, and residential rentals. Main Rentals is a registered VAT vendor for VAT purposes on invoice basis. I'm not going to explain this again. I explained it. As Main Rental makes both taxable supplies and exempt supplies for VAT purposes, the commissioner applied an acceptable input tax ratio of 60%. So the entity is making exempt supplies and standard rated supplies. So when it comes to input VAT, we are going to apportion our input VAT. Why? Because 60% relates to taxable supplies, then 40% relates to what? Exempt supplies. That is given here. They are saying to us, the commissioner acceptable input ratio of 60%. Why are we saying it's exempt and the standard rated supplies? We are providing commercial and residential accommodation. Residential accommodation is zero rated, is exempt, sorry. We discussed this last week. But commercial rentals is standard rated. But again, on commercial rentals, you have to remember that that are rules which talks to more than 28 days. If you stay for more than 28 days, you calculate VAT on 60% of what? Of consideration. That should come to your mind. The accounting system operated by Main Rent has provided the following analysis of its income and expenditure for its 2 months tax period ended 31 January 2020. All amounts are inclusive of VAT, right? They're saying all amounts are inclusive of VAT. You know what it means. It talks to how you are going to calculate your VAT portion. You are going to say 15 over 115. Right, so we're given income, which is from commercial rentals. Commercial rentals is a standard rated supply. So take the amount as it is. There is no accompanying note. There's nothing we can do. There is no accompanying note here. Yes, you check your question. We have notes here, But these notes now, you see, they go with this one, etc. So we're going to take 279,300 times 15 over 115. So come here and say commercial accommodation.
Sorry, sir, you are not sharing your screen.
Oh, it's network, ne? Since when?
Since you came back.
Trust.
Yes.
Oh, sorry. Okay. So we're simply saying here, we're looking at this question. So I've been writing alone here. All this. All right. the entity is making exempt supplies and standard rated supplies. Right, standard rated supplies is commercial rentals. Then exempt supplies is residential rentals. Right. So how much of it relates to exempt is 40% because we're given a ratio here, 60% and 40%. 60% is your standard rated, then 40% is exempt. So when it comes to input VAT, we're going to apportion it using this ratio. Right, we start with our income. Commercial rentals is 279,300. So we're going to calculate input VAT on this amount, 279,300 times 15 over 115. It will give us how much? Let's move fast. Let's do the calculations. Where's my calculator? Let me also cut off here so that right. How much are you getting? $279,300 times 15 over 115, 36430. Right, that's what you're getting.
Yes.
Right, then we move on to the next one, which is what? Which is residential rentals. Residential rentals. Residential is exempt, no VAT. Residential is exempt, good people, no VAT. You get a mark to say exempt, or you just write exempt supply or exempt there, no VAT. Then we go to the next one. What is it? Interest levied on overdue rentals. Interest is a financial service exempt. Interest, you see why I'm saying it's a good question? Interest, a financial service exempt. No VAT on financial services. Financial services, financial what? Services. What's happening now? Financial services / exempt. Or you can just write exempt, still fine. Why is my screen popping now? Then it's 0. Do you understand this too? Are you following? Do you get the sense? Oh, the reason. Residential accommodation is exempt, there's no output. Interest is a financial service. Financial services, we say they are exempt. Right. Then we move on. We have insurance settlement. Now we need to go to note number 1. What should come to your mind? Is it a replacement of asset? If it is a replacement, no VAT. Is it a payout for disability? No VAT. Is it a payout for life assurance? No VAT. Then it is, if it is for something else, then we have VAT. Let's go to note 1, a deemed supply. The insurance settlement of 184,000 was for a truck that was stolen in November 2019. The book value of this truck at the time it was stolen was 160,200. In January 2020, on the receipt of the insurance settlement, many rental purchased a new truck, C note number 3. Right, what we've discovered is the payout is for a truck which was stolen. Are we together? It was for a what? A truck which was stolen. Right, a truck, we know it's a delivery truck. If they say truck, if they just say truck, it's not a motor car. Are we together? If they just say truck is not a motor car, so it's for a business use. So we're going to say our insurance payout or indemnity payout, indemnity payout, payment. How much? They said 180 what? 180.
400.
It's not 180, 400. times 15 over 115. Good people, this entity is making 60% taxable supplies and 40% exempt supplies. What did I say to you? I said to you, when it comes to input VAT, we apportion input VAT, but output VAT, we do not apportion it, with the exception of insurance payout. With the exception of what? Insurance payout and the fringe benefits. Right, we do agree that we have output VAT coming from indemnity payment. But this company of ours is making 60% taxable supplies and 40% non-taxable supplies. So 40% of the payment is going to go to what? Exempt supplies. So therefore, we need to apportion our payout. We say times 60%. Output VAT based on the general rule is not apportioned. However, we only apportion it when it comes to insurance payout and the fringe benefit. We apportion it to the extent of making taxable supplies. Our company is making 60% taxable supplies and the 40% non-taxable supplies. So insurance payout which relates to non-taxable supplies will not attract VAT output. Is it clear? Are we together?
Yes, sir. Yes, where are others?
People are now tired. Sorry, we had to
We
strike
are
because
here. We are here.
next week we have to move to the next topic. Ne?
Yes.
Right. We are covered there. Then we move on to the next item. They are saying what? Insurance settlement, right? Good people, we're done with the income given. What did I say? We now have to look for fringe benefits. How do we look for fringe benefits? Go to all the notes given and check for use of company car or any item given to an employee by who? By the employer. Go through all your notes and look for fringe benefits. Students tend to skip fringe benefits when it comes to questions of this nature. Is there any car which was given to a director or not? Note number one, we've dealt with note number one, there's no fringe benefit. We go to note number two. Main Rent purchased a commercial building on 14 December for 1,200,000. Main Rent decided to rent out the building on 1 January 2020 and the lease agreement was concluded with Office ABC, a registered VAT vendor. The lease agreement determines that the lease period is 20 years as of 1 January 2020. According to the contract, Office ABC must effect improvement to the existing building and to extend the office space at a cost of 550,000. The improvements were completed on 31 January 2020. Office ABC will use the building to make 70% taxable supplies. The lease income from the building is already included under income. Can someone tell us what happened here? Can someone try to summarize this story? Right, what happened, we leased a building to a tenant, and then we agreed that the tenant will make an improvement to our building. Improvements of how much? Of 550,000. Ne? So we are going to get a benefit of 550,000. So according to SARS, we are supposed to pay output VAT on the improvements, right? How do we calculate output VAT on improvements? You just say improvements times 15 over 115, then times the portion which is not used for taxable supplies. That's the rule. It's an exception. You say your improvements times 15 over 115, then times the portion which is not used for taxable supplies. They say to us here, the building makes 70% of taxable supplies. So on this one, there's an exception. We don't apportion it based on taxable supplies, but we pay VAT on the non-taxable supply. So we come here and say improvements. With this one, don't worry. Don't stress about it. What you have to just know is we're doing it for completion purposes. They are not going to test you on this one. Leasehold improvements. Improvements, will deal with them in calculation of income tax. We'll just say 550,000 times 15 over 115, then times the non-taxable portion. This is CTA stuff. Remember, these questions, they are meant to encourage you to start. You discover even that the questions which come to the exam, they are not this difficult. This is meant to encourage you to start. So that's how we deal with improvements. You just say your improvements times 15 over 115 times the non-taxable portion, which is 30%. We are going to deal with improvements when it comes to calculation of what tax liability. Don't worry, not VAT. How much are you getting here, good people? All right, let me also do it. $550.15 over. All right. Confirm.
Yeah, seconded.
Right, seconded. Right, that's how we deal with leasehold improvement. You just say leasehold improvement times 15 over 115 times the portion which is used for non-taxable supplies. It's just a straightforward principle, but don't stress much if you don't know. Right, remember, we're looking for fringe benefits. No fringe benefit there. Then depreciation is charged on 2 vehicles owned by main rent as follows. First car, a motor car used by its managing director, purchased in 2018 for 96,900, including VAT of 11,900. The managing director had the sole use of this car for the entire tax period. So this is a fringe benefit we are looking for. The second truck was purchased on 1 January 2020 at a cost of 102,600, including VAT, to replace that was stolen. The truck is used to transport. This truck is used to transport the maintenance team between various. All right, this one there's no fringe benefit. So the truck which give rise to a fringe benefit is the first one. Let's deal with it here so that we import our answer to that part. Right, so what happened here is there is a car which was given to the director, managing director. Right, what we do, we need to determine the value first. Determine the value is the cost, which is 96,900 times 100 over 115. People, by saying times 100 over 115, we're taking out VAT here. Right, or you can just say 96,900 minus 11,900. But let's follow this format so that you won't get it confused in the exam. So 96,900 times 100 over 115. Then times what? We have to check whether it's a motor car or not a motor car. If it is a motor car, we'll say times 0.3%. Not a motor car times 0.6 what? %. Right. Firstly, a motor car, they taught us it's a motor car. So we're going to say times 0.3%. Why? Because it's a motor car. It's not a delivery vehicle. It's a motor car. So we use 0.3%. Then after that, we check whether the employee, the director, paid any maintenance fee. They said nothing about maintenance fee. So the director did not pay any maintenance fee. Are we together? The director did not pay any what? Maintenance fee. Then after that, we say times 15 over 115, right? Then it times the months in which the director used the vehicle. They say to us, this motor car, the managing director had the sole use of this motor car for the entire period. The tax period is 2 years. Times 2 months, sorry. Then it times 2 months. However, our entity is making taxable supplies and non-taxable supplies. So we apportion this output. Why? Because it's a fringe benefit. I say to you, output VAT on fringe benefits and the insurance payout, we apportion them. That is provided the entity is making taxable supplies and non-taxable supplies. Our entity were taught that is making 60% taxable supplies and 40% non-taxable supplies. So therefore, we are going to say times 60%. Right. Any questions on this? Any questions? We are fine. Right. Give me the answer. 96,900 times 100 over 115 times 0.3% times 15 over 115 times 2 times 60%. All right, let's see whether you are going to get the same answer.
I got 39.5.
You got 39 point what?
5.
39.5, which is 14, eh?
Yes.
All right, let's hear the second person. Let's hear the second person. Right, how much are you getting, good people? Right, I'm also getting 40. All right, we're going to go with 40. What do we call this one? Use of company car, use of company car. 40. At the calculation, people, you are going to get it from that side. Right, that's all. Let's add the total here. Right, fringe benefit, which they usually give us, is the use of company car. Watch out for it. 36,430 plus 21,252 plus 40. We did not calculate the total of indemnity payment. Sorry, there's no total here. Why did you put a dash? 180,400 times 15 over 115 times 60. 180,400 times 15 over 115 times 60%. How much is it? People are now tired. Others, they have already left. Sizakele, Michelle, Laura.
Yes.
Hey, give me the answer there.
I'm still calculating. I'm getting 14,118.
14,000.
118.
118. It's too much.
It's too much. Let me calculate again.
180 times 15 over 115 times 60%.
180, 400 times.
110.
15. Wait, I'm calculating again. Times 60%, is it?
Yes.
Yeah, it's 14,118.
I can't be 14,000. Even 10% of this, yeah, times 60%. I don't do it.
Is it 180 or is it 80,000?
It's what?
Is it-
180,000. 400, ne?
Yeah. So I'm
Times
correct.
bracket 15 divided by 115. Then it times 0.6. It's 14,118, ne?
Yes.
14,118. Why does it look so much? Right.
It's 14,000.
Now we move on to output VAT, input VAT. Input what? VAT. Right, now we are going to go to our expenditure. Ne? Now we are going to look at our expenditure. Remember output, we claim it on what? We claim it on, let me just say expenses. For simplicity's sake, we claim it on expenses. So let's go to our expenditures now and see which ones attract VAT. All right. We have
A new
right.
commercial.
First one, we have purchase of a new commercial building, 1,240,000. We are going to claim input VAT on it. Why? Because it's a commercial building. Are we together?
Yes, but what about
commercial building?
Okay.
What about what?
continue. Note number 2.
All right, we'll check it now. Commercial building. Give me the amount. How much is it?
It's 1,240,000.
1,240,000 times 15 over 115. I am not going to get the totals because you are tired. That's how you are going to calculate it. Put the total on your own. Right, you said how about note number what?
2. Oh, we're still going there.
Oh, all right, you are going to be directed by oh, they said refer to note number 2. Yeah, you're right.
Yes.
And what happened in note number 2? Okay, note number 2 is talking to improvements, ne?
Yes.
Remember, on note number 2, we rented out the building. And then we agreed with the tenant to effect an improvement of 550. So on this one, there's output VAT. What they wanted to indicate is that there's output VAT. How do you calculate it? You simply say your building, your improvements times 1,111 times 15 over 115, then times the portion not used for taxable supplies. That's what they were stressed in here.
Okay.
And then it's followed by right, then it's followed by purchase of a new flat to let. Purchase of a new residential flat. Can someone give us the answer on this one?
It's exempt. It's an
Exempt.
exempted supply.
Exempt supply, ne? A new residential flat. New residential flat. Exempt supply. Exempt what? Supply. No VAT. And then we move on to the next one, which is a bank charges 1254. Right, bank charges. What's the story on bank charges?
Standard rated.
Right, standard rated. Bank charges are financial services. Of all the financial services, bank charges are standard rated, good people. Ne? Financial services are exempt except for bank charges. Bank what? Bank charges. We're
Why
going to
they
say,
are
we said
standard
1225. Why they are charge rated?
Yes.
Because banks are making money through bank charges, ne?
Okay.
So the rule is bank charges are standard rated. 1 to what? 5.5, ne?
5.4.
5.4. But note that the entity is making what? These bank charges, they relate to the whole business. So we're going to apportion them times 15 over 115, then times 60%. They relate to the whole business. So you apportion them. You don't claim VAT on 100%. Only non-taxable portion, no VAT. Does it make sense?
Yes.
Then we move on to the next one. Next one, we have audit fees. There's no note accompanying it. We are audit fees, they relate to the whole business. We apportion them, 14,250. Audit fees. Audit fees. 14,250 times 15 over 115, then times 60%. Apportion. How much? You put the amount, please, there. You are not tired. You are no longer efficient. Then the salaries and wages. Can someone give us the story on salaries and wages? Salaries. Why? Not an enterprise, ne?
Yes.
Not an enterprise. So there's no VAT. Not an enterprise. You put a dash there. Dash these ones. The other ones, you do the calculations, eh? That's what you do on. Please, this one is the easiest one. If you are given salaries and wages, you say not an enterprise. Or enterprise with business. Right, then we move on to the next one.
Track.
Right, track. What's the story on track? They said refer to note number 3.
Yeah.
What happened on note number 3? Right, on note number 3, that's where we're given our tracks. Yeah? Right, they're saying there are 2. The first motor car used by the managing director was purchased in 2018. So this one is out. It wasn't purchased in the current year. Remember, we're doing for 20 what? We're doing for 2020. It was purchased in 2018. So the input again with this one, the motor car input was denied in 2018. We're not going to include it in the current year. Second track was purchased on 1 January. That is the current tax period. It's a track, good people. Are we together? It's a what? It's a track. So we claim input VAT on how much? 102,600. 102,600. Track or new track 106,200 times 15 over
115.
115. Then times 60% is used for the whole enterprise. So apportion your input. Apportion your input. And then we move on.
Depreciation.
Depreciation, can someone give us the answer there? Depreciation is not a supply.
Not a, yeah.
Yes, depreciation is not a supply. Not a what?
A cash item.
Not a supply. Yes, or not a supply. So no VAT. You get a mark for saying not a supply. Right, next one, it's what?
Maintenance.
Right, maintenance. Right, they just said maintenance. So it's for the whole buildings. Therefore, we apportion it. How much?
16,000. Oh, no. Oh, yeah, it's the same. 16,416.
16,416 times 15 over 115, then times 60%, we apportion. Right, next one, we have the paper, the questions, good people. I did share them in the group. Next one is the insurance premium note number 5. Insurance premium note number what?
5.
5. Insurance premium of 15,000 were incurred for insurance of motor car, the truck, and the various what? Buildings. Right, we know that insurance premium is for everything, so therefore we what? We apportion it again. 15,048. Insurance, where is this coming from? Insurance, how much?
15,048 rand. For 48 rand.
16,000 and
15048.
15 or 15048
048.
times 15 over 115 times 60%. Right, next one.
Interest incurred on mortgage bonds.
Interest is exempt financial service.
Financial services.
Interest, financial services. Interest on bond. Right, exempt of financial services, ne?
Okay.
You get a mark for that. Right, what else?
Office equipment rentals.
Office equipment rentals. They just said office, right? Office, we apportion it, note number 6. Let's go to note number 6. Right, office rentals for 5,000 were incurred for the 2-month tax period as follows. Fax machine, photocopying, coffee machine. Yes, they are clear. Right, can someone tell us how are we going to treat this? Right, on fax machine, we're going to say 2736 times 15 over 115 times 60%, ne?
Yes.
Then on photocopying, we do the same 1482 times 15 over 115 times 60%. Then coffee machine, people, it's an entertainment, ne? Input denied.
Oh.
You come here and write input denied, entertainment. Input what?
Denied.
Denied, entertainment. Right, coffee machine, anything for a canteen, input is denied. It's called entertainment. Right, then employee substance of 741 is for the tea and coffee provided. Right, I think if we do it that way, we'll get lost. Employees substance. Right, what do we do with this one?
Not 7.
It's also entertainment, supply of entertainment. Unless if the employee is required to spend at least a day away from his normal place of residence. In this one, they said to us, this employee this substance is for coffee provided to employees. So it's entertainment, no VAT, or VAT denied. Input VAT what? Denied. Why? Entertainment. You only claim input provided to the employee is required to spend at least a night away from his normal place of residence. Does it make sense?
Yes.
Then fuel, easy mark, 0 rated, no input. Ne?
Yes.
0 rated. Then bad debts, right? If bad debts, now remember with bad debts, people, what you need to understand is bad debts, they come from what? Sales, huh?
Yes.
So this entity of ours is renting out buildings. So they come from rentals. So if there's a bad debt, you claim input VAT, but provided the bad debt relates to taxable supplies. So bad debts relating to 278,300 will claim input, but bad debts relating to residential, we are not going to claim any input. Why? Because it's exempt. So we need to go to note number 8 and see the distribution of these bad debts. Let's go to note number 8 and see the distribution of these bad debts. Bad debts of 16,000 are made up of debts written off for commercial rental debtors, 9,804. On 9,804 bad debts, 9,804, we are going to claim input VAT at 15 over 115. Why? Because we paid the output when we made the when we received the rentals, or when the rentals are accrued to us. So therefore, we claim input. But on 6380, we are going to say no input, exempt. Are we together?
Yes.
On these ones relating to residential, we're going to say no input. Why? Because we did not claim, we did not charge output VAT. It's an exempt supply. And then traveling expense, note number 9. Let's go to traveling expense, note number 9. Traveling expense are made up of 2,508 for hotel accommodation and the meals incurred by employee of main rent during an out-of-town business trip to locate a new property to let. And the 2 overseas air ticket costing 9,804 purchased by main rental Ltd. These overseas air tickets were given to employee and his wife as part of employee salary. Hey, what's happening here? Read the story and understand it. The employee incurred traveling expenses of how much? 2,508 for a hotel accommodation and meals incurred by an employee of main rent during an out-of-town business trip. This is a business trip, is an expense in what? In a normal business activity. So we are going to claim input VAT, but we are not sure whether this travel relates to residential or what? Commercial building. So we apportion, because they just say travel expense for business purpose. So we're going to say input 2,580 times 15 over 115 times what? 60%. We apportion our input on it. Does it make sense?
Yeah.
Then the other part related to an overseas trip. It's an air ticket for an overseas trip. Travel by road is what? Is exempt. Travel by air is 0 rated. So it's a 0 rated supply. Overseas air ticket is 0 rated. Why? Because it's a travel by air. You remember it? Yes. That's where the tricky was. Right? This one is a very good question. It incorporates everything. Exempt supplies, 0 rated supplies, deemed supply, apportionment of fringe benefit and insurance, and apportionment of your input, including entertainment. Everything was tested. Do you see that?
Yes.
This question tests everything. If you manage to answer this question and explain it to the next person, trust me, you'll be fine with VAT. Are we together? You manage to answer this question and explain it to the next person, you'll be okay with your VAT. Right, good people, I think we're going to end here today.
It's been a long day.
It's been a long day. As far as VAT is concerned, the ball is now in your hands. I have tried my level of best. So next week we look at income, gross income. Unit 2, gross what? Income. Please go practice VAT. How many questions are here? Try the other questions given here, 1.3, 1.4 etc. The solution, I think I also shared within the group then. Yeah, I
Yes.
think I also shared the solution. Please go through all the questions. Where you are having a challenge, it's fine. You can ask, I'll respond. But the most important thing is for you to understand each and every item examined there.
Okay.
All right. Bye-bye. See you next week.
Bye.
Bye.
Bye.